Everybody, welcome to your Thursday edition of the TraderMerlin Show. Hello for those of you all around the world. Shinobi Brian, good to have you with us. You become more of a regular on the program now. Love it. Over in the UK, we got Katut down in the southern hemisphere, down in Bali. I have a feeling I'm going to visit Katut before I'm going to visit Brian, though, just because I love Southeast Asia and the whole warm weather down there. Give me Indonesia any day. Hello, everybody else. Good to see you. Tibor with us as well. Tibor, if I remember correctly, it was Romania. So we got people all over the place today. So hello, Tom. Hello, Lori. Hello, Siraj, Walter, Lisa, Ron. Good to have you with us as well, and Eric. So good. I'm missing. Where's Les? Les is usually the first one to comment on the show today. No Les today, huh? Probably out watching some rockets take off. All right. Today's show is really all listener questions. I was going to have a nice Q&A graphic that I was going to put up, but I figured, you know what? We'll just go with the main question, which I think is an interesting one. Most of you are probably past the point in your lives of making this decision or understanding the differences between something like a Roth IRA and a 401k. And I'm not going to go into all the differences here. It was just really spurred by a question from an individual who, congratulations, by the way. Marcel says, hey, Merlin, I'm in my mid-20s and just landed a great job with the 401k plan. I was going to enroll, but I have friends saying that I should do an IRA instead. Would love your opinion. Well, this one's easy for me. It's very easy in my opinion. So if you have your 401k and IRA stacked up side by side, there's obviously some huge pros to a 401k and huge pros to an IRA. The main difference being with a 401k, obviously it's not quite self-directed, meaning you can't really choose whatever you want to put it in unless your company has a self-directed 401k. So for Marcel, if you're just starting out, there's two questions you should ask your HR department. What is the matching that they offer and how much is it? So let's say they offer one-to-one matching up to 3% of your salary. Then, from my opinion, is you should max out whatever they match. So if they put in a dollar matching, meaning if you put in $1, they match up to 3%, then load it up, max out that 3%. There's no need to go beyond that 3% because they're not matching it. So if there's no matching whatsoever, then it might not be in your best interest to stay with your company's 401k. Why? Well, if you look at Scott, I'll go on. I'll get you natural gas here in just a second. If you look at them side by side, the 401k, which is great as long as your employer is matching to some extent, even if it's only 25 cents on the dollar. Think about it. If your employer matches 1-to-1, that's a 100% rate of return on your investment. I mean, that's phenomenal. Now, it's only on the time of deposit, right? Of course, you have to make the right investments. And of course, we could talk about portfolio theory, asset allocation models, and how you should spread that around. But that's not the discussion here today. It's simply, should you do a 401k or should you do an IRA? I would do my 401k and absolutely max out whatever I can as long as they're matching. Whatever they match to, max it there. Anything beyond that, if you want to invest more, I would say go with an IRA. The benefit with an IRA is flexibility. In a 401k, you're kind of committed to keeping your money in there. There are some things that you can pull money out for. You can loan yourself that money, but it gets a little complicated. You can do a lot more with an IRA, not only because you have the flexibility to pull out when you want, but the investment selection that you can put yourself into is much more broad with regards to IRAs. Now, if you're the type of investor who you don't care, right? You just want to buy something and just sit on it until you retire in 40 years here, in case of Marcel, then fine. Just go through some diverse ETFs. If you're someone who's more active, you can be trading options. You can be trading futures. You can be using leverage instruments. I mean, depending on how you structure these IRAs, you can get involved with pretty much anything in an IRA. Again, I would be careful there because the goal of an IRA is to be a retirement account. It's in the title. So if you are being more aggressive in those accounts, you run the risk of losing some of that capital that, in theory, is supposed to be your nest egg and help you through your golden years. So, Marcel, no brainer. Whoever told you not to do an IRA doesn't understand matching, apparently. So max out whatever they match at your work. And then if you want to invest more, so let's say they only match, I'm making this up, 1%. And you're like, man, I really want to save more than 1% for retirement. Great. Max out your 1% at your work and then go and invest whatever you feel comfortable investing in. Don't go too far, right? You don't want to choke yourself out. You want to make sure that you have enough capital or money in your account to live comfortably. But put whatever you can in those retirement accounts and grow them. The question now becomes, would you rather use something like a a Roth IRA or a traditional IRA? I mean, that's a totally different question. And I'm not a financial advisor, but if I have worked for one in the past, if I was in your shoes, Marcel, and I was looking at, okay, I've got my 401k, most likely your work does not offer a Roth 401k. If they do, that might be something of interest for you, right? You might want to look at if they have a Roth 401k. If not, I would suggest a Roth IRA. Why? You're 20 years old. My guess is you said you got your, I don't know if it's your first job. No, you said you landed a great job with the 401k plan. I'm assuming here, and this is me being assumptive, that you're not at the top of your pay grade, right? I don't know where you live or what you're making, Marcel, but let's say you got a job, you're entry level, or maybe you got a degree and you're getting, let's say, $50,000 a year. In 10 years, hopefully you're going to be growing your salary. You're going to do good at your job. You're going to get promoted. The cost of living is going to rise. And instead of making $50,000 in 10 years, maybe you're going to be making 70. And in 20 years, maybe you're making six figures. So for me, I would rather pay the taxes now on my retirement deposits because I know the time horizon is so long. Basically, what difference here is in a traditional IRA, you deposit money and that gets taken out of your current taxes. Basically, it drops your income base. So let's say you had a $50,000 income and you deposited $5,000 in your IRA. Okay, now you have $45,000 worth of taxable income. But you're going to be paying the taxes on the back end. So let's say after 45 years or 40 years or however long you want to invest for, you decide to pull out money out of a traditional IRA account. That IRA is going to be taxable at ordinary income rates. So if you want to pull, let's say you've got $1 million and you go, man, I want it right now. Boom, taking it all. Bam, party time. You pull out $1 million, you're probably going to be in the 49% tax bracket, right? You'll lose half of it. But if I have it in a Roth IRA and it's $1 million when I pull it out, I can take out every single penny of that and not be subject to taxation on it. I already paid taxes when I was younger. So I would look more towards that. There are certainly some spreadsheets you can run, but when I was in college, these Roth IRAs were rather new, and I actually built spreadsheets on it. And the numbers that it showed for me were really the only people that a Roth IRA did not benefit were those that were a couple years away from retirement. So that's my 2 cents. I would probably do your traditional 401k with your office, do matching, and then move on from there. If you want to do more, then go to self-directed into an IRA. All right, let's see. I got a bunch of questions. We'll do the nat gas one here in a second. Same idea as pension in the UK. Employer matches, go with the max. Exactly. Yes, Shinobi. Yes, I don't do that enough. He says not financial advice. I guess, see, here's the thing. If I was to do one-on-one, let's say I was just me and Shinobi Brian here talking face-to-face and I made those comments, that's considered financial advice. Technically, from my understanding with lawyers, if I'm doing one-to-many, then it's really not personal financial advice. But who knows? Again, do your own due diligence. But Marcel, congratulations on the new job. I hope it works out well for you. Talk to your HR department. Find out a couple different things for me personally would be, what do you match? How much do you match, up to what percentage? And then ask them if it's self-directed. If it's a self-directed 401k, you now have a lot more flexibility because traditional 401k plans put you in a whole bunch of crap. They put you in junk mutual funds with a lot of fees. That's why the fund managers make so much money, is because those 401ks have a lot. They're all mutual funds. So you usually have nothing but fees in there and it just takes away a lot of your profit. So let's see. Completely agree with investing in a 401k for matching and then rest in IRA. Yep. When was the advice? Oh, it was given by a financial planner. Good to see financial planners doing that. Of course, they'll probably try to put you into mutual funds, but go with ETFs if you can. Anything but crypto in an IRA, just crypto exposure. I think that there are some places that you can get a crypto IRA, but that's beyond the scope here. The intraday trading is a big advantage to a self-directed IRA. Absolutely, is John. Perfect. And again, I love saying those types of things, right? Because it's great you have that ability to go into your IRA and say, you know what, I want to actively trade this. I'm not worried about commissions. I'm not worried about gains. I'm just going to keep trading in here. My concern is that the statistics show that most people that trade lose money. The statistics also show that markets go up over time because indexes are built to go up. So from the 401k perspective, the IRA perspective, you should be looking at the long haul. I'm concerned that somebody might become more active in their IRA account and churn that account and maybe start to incur more losses than they should. So I always try to keep those separate. I even have a self-directed IRA, and it's just I'm not active in it. I'm making sure that I do market timing pieces, right? And I incorporate some of the things from Strategic Investor, but I'm making sure that I'm not very active in it. I have enough accounts with my cryptos, my Forex, my options, my equity accounts. There's enough going on for me to not have to worry about the long-term investment 401k stuff. So I look at that one periodically. But good point. Yes, you can actively trade. Hello, Vernon. Catherine says, years between retirement and taking Social Security are typically low income years and good time to convert traditional IRA to Roth. Do you agree? I can't make that blanket statement, Catherine. I think that there needs to be more analysis there. I mean, to me, it all boils down to open up some Excel spreadsheets and see what those numbers look like for you, because you'll pay a conversion fee to roll those things over from traditional to Roth, right? You're going to have to pay taxes on it when you pull it out. So I'm not sure on that one. I think it depends on the situation. I think it depends on your income as well. But in Marcel's case, I'm hoping you get a six-figure job, Marcel, but I'm assuming you're in your mid-20s, you're probably not landing that executive job. You're starting in somewhere on the lower tiers here, not making a lot of money. And since your time horizon is so far, go with the Roth if you can. Would be fine. Lori said, I love trading in my Roth and IRAs. I've made a lot over the past. Great. Awesome. Good. But Lori, you're also somebody who's gone through taken a bunch of education, you understand the rules, you apply the rules, and if I'm not mistaken, you're actually in the clubhouse and mastermind teaching lessons, right? So you're applying everything that you're learning on a daily basis. I think you would all agree, you probably all have some friends out there that they're not educated traders. They're just people who are throwing darts and going, oh, what did that guy talk about? Oh, I'm going to buy that stock. I'm going to buy that crypto. I'm going to buy these commodities. And they have no clue what they're doing. Those are the people that I'm worried about. The people that are going to be watching, Mr. Kramer's show and just buying whatever he says, they'll probably not do that great over time. Drew, what do you do if your Roth and traditional IRA got mixed together on a rollover and got placed in a Roth account? Also can't redo the process since it's been more than a month. That's weird. I've done both of those, Drew, but I've never mixed them together. I'm not quite sure how that happened. I would contact your broker because I would want to separate those. I have had Roth and traditional IRAs, right? I've had both, and they're still there, but I can't contribute to them anymore because of income limits. But I have them separated for that specific reason. They were started that way. My concern there is you might have some trouble or issues with the IRS later on down the road. That's above my pay grade on how those got mixed and what the impact might be for you on having those mixed. That's kind of a weird situation to be in. I don't have an answer for you on that one, Drew. Sorry. Good, yeah. So Lori, you're in the mastermind, but this is good stuff, right? You're for me, when trading really started to click and really started to move from I'm a complete loser and I felt like I was losing almost every day was when I started teaching it. I know it sounds weird, but it's because I was going into these classes basically saying to everybody, here's how you're supposed to do it. I know what I'm supposed to do, but I just personally wasn't adhering to the rules. Now, when you're teaching something, you're going in there and you're telling them specific, these are the rules. And it started to just pound it in my head that this is what I have to do. Yes. And I'd be telling people in the class, like, okay, let's put our stop loss right here and make sure you execute when it gets there. And all of a sudden it would hit my stop loss in my personal account. And I'd be like, man, I should just go let it run another 10 points, another $100 a loss. And I go, wait a minute, I just told my class they're supposed to do this. I got to lead by example. So I just started following all the rules, and then things got a lot better. So teaching, I think, helps out significantly, which is one of the reasons, I loved the fact that I got to work at Online Trading Academy all those years ago, but even more importantly now, and I think Lori and those that are in the mastermind would probably agree, that being around that collaborative environment of people who are doing this on a regular basis, as well as people who understand your methodology. I've also had people that I've traded with over the years who are doing things completely the opposite or different things. And I look at it and go, I don't want to really trade with that person because they're contaminating my style. They're contaminating my strategy, which works for me, right? They're throwing out, oh, check out, it's oversold on RSI. You got to buy it right now. I'm like, well, hold on. Well, is it in demand zone? Because I'm not buying squat unless it's in a demand zone. So yes, education's awesome. Yes, one of the reasons we teach for sure. Yeah. Well, Eric says teaching reinforces the stuff, right? It reinforces it. The problem is if your teacher is teaching you something that's incorrect, then you just have the blind leading the blind. So it's really about understanding that strategy. Does the strategy work? And I think when you look at supply and demand, it's not working 100% of the time. There's nothing that is, right? The only thing that works 100% of the time is not trading. If you don't trade at all, zero, well, then you're going to be perfectly timed in all your entries, exits, stop losses, and everything. You're perfect. But I would say from my experience that it's a higher than 50% probability, a lot higher than that. And I think when you start to add in odds enhancers and some of the other things that you learn about specific stocks, commodities, futures, currencies over the years, then all of a sudden you start to get that probability start to increase greater and greater. So that's it. Teaching reinforces it for sure. All right, let me go past Marcel's. I wasn't actually planning on going that long, but Marcel, thank you for that question. I appreciate it. John, let's see. John sent in this one today. I got actually 3 questions today right before the show, so thank you guys so much. I appreciate those. John says, I bought Steve Nissen's candlestick book and have been trying to apply it to charts. Would you call the pattern that formed on WEC a bullish Harami? WEC. All right, so let's bring up WEC. All right, here you guys have the chart of WEC. This is WEC Energy Group. I do not trade this one, nor do I have an open position on it. Main reason being, you look at the volume down below, this wouldn't even make a watch list of mine because it trades on average about 1.1 million. I do my cutoff at about 1.5 million. So, the learning cone, 70% retention by teaching. Yeah, I like that. Yowza. Love that. Love the name too, Yowza. All right, if we look at this price chart right here, I'm not exactly sure what WC Energy is into, what they do. Obviously, it's energy, but I don't know what capacity. But if I just look at this purely on a technical perspective, to John's question, is this a bullish Harami? I would say yes. Some would argue that it's not technically. And here's the thing. What we've had on WEC has been a pretty aggressive 3-day slide from roughly 97 down to about 92. So a $5 slide, that's a couple percentage points. This candle that formed today, green body, small green body, topping tail, bottoming tail, it actually does go below the low of yesterday's candle, but the body is within the range. So I would call this a bullish Harami formation. What I like about it is it also came back down into this area of demand. You can see off to the left-hand side there's this little area of, it's on snap mode. I hate when I do this to you guys, it's on snap mode. You've got this little area of consolidation right here before it ripped out on good volume. So I like the fact that you had a pullback into demand and it has a Harami formation. So to me, this is like a secondary confirmation, right? I would have been okay potentially taking this trade because it's been on an uptrend for a couple weeks now. Not a huge uptrend, but certainly a shorter term uptrend. Pulls back into that demand zone, great. Now you have a bullish Harami, which is could potentially be a confirming or supporting factor for this trade. So, John, I like it. I think WEC would not be bad. I would personally wait for tomorrow to break the high of today, meaning, I'll get my snap mode again, turn that on. I would be looking for a break above 92.80. 92.82 is the high there, so maybe you give it a little wiggle room and say, if it breaks 93, I'll be looking to go long. But all in all, I like it. I just don't like the volume that went along with it. Oh, on that note, you guys remember yesterday was Dover. Well, I took a trade this morning on DOV. Actually, it was an automated trade. I had a bracket order in place, an OCO order, and look at what happened. So this was how the chart looked yesterday, right? We said below 160. The low of yesterday was 163.22. So I was like, all right, if we open up here and then it drops back down, then I'll look at potentially going short on this one. Look at the 5-minute chart. This one was a couple $100 loser today. Kind of irritated me, but it is what it is. Followed my plan. Here you guys can see. So when I initially put the order on, it was as we opened up, no big deal. Use conditional orders. It basically set a stop limit if it hits 163.20. If that happens, then open a short position. I had a $1 stop loss on this thing. So it triggered. And you notice that it triggered and just went down by the low of this thing was, the low of this was 163.11. So at one point, I was 9 cents in profit on this thing, and then all of a sudden, it just started to rip back to the upside, stop me out real quick. So unfortunately, Dover didn't work out on that trade today, but it was a nice setup. I love that climactic volume it had yesterday, so for me, it was worth a shot. Lost a couple hundred on it. Still okay for the week. Anyway, thought I would share that one with you since we're talking trades. Don't want to talk about winners all the time. I'm going to talk about losers too. Let's see. What other questions do I have here? I might short the uptrend when I shouldn't. I might short the uptrend when I shouldn't, and that is costing me, but never ever do I not use stop losses. Yep, exactly. Absolutely, Walter. 100%. 100%. And again, that's why I talked about Don Fron the other day. You know, one of the things, if you listen to him, he's adamant about it. He goes, I'm almost militant about my stop losses. I cannot afford to take big losses. There's in the crypto space, you've seen things fall 50%. Okay. In that arena, I'm okay with those kind of swings, but in an equity account, can I afford to have something drop 50%? I can afford it, but think about what has to happen. If something drops 50%, you have to make 100% to make that money back, just to get back to break even. So the deeper those losses become, the harder it is for you to get back from them. So don't let it happen. You don't want it to be so small that you get stopped out all the time. This is where it's understanding how your security moves, the ranges that it moves in, and that's using things like ATR or other indicators out there to kind of map out that distance and make sure you don't get caught. Okay, let's see. What else do I have here? Tim says, can you look at Harley-Davidson on today's show? I can do that. So let's go and bring up the chart of HOG. They reported earnings yesterday. Yes, I believe they were yesterday before market open. Oh, come on, Merlin, dig in your head. I think that they beat earnings. I think they're expecting $1.15. I think they came out at $1.33, which is a pretty big beat, right? They beat earnings substantially, and yesterday down around 7%. Today down another 1.5%. So, is this a case of buy the rumor, sell the news on Harley? I don't know. And Tim, it really depends on what your interest is with Harley. If it's actually just trading them because you think you want to make shorter term trades, or it's a long term investment perspective. Take a peek at the longer term. This thing, for the better part of 3 months, has just been slowly rolling over. Now it feels like it's picking up some speed. It actually looks to me like this gap that's way back here on the 30th of March, the gap started about 37.55. I'll put a snap on there just so you guys can see it. And for the podcasters, I apologize. 37.53 is the closing price of that day before the gap up. I could easily see this thing closing below or closing that gap. And I do like the fact that it's at $40 even right now, which is also a demand zone and a whole number psychology. So you look at this little cluster of price that was between March 31st and April 16th, right? It really formed an island of price. We've come right back down to that one. It locks into 40. So you're at a decent point right now, Tim. But boy, that gap just looks like it wants to fill. I mean, the trend is your friend until the bend at the end, right? That's what they always say. And right now, it's not looking so good. You could make the argument that if we go back into lockdown, then COVID might be good for Harley because people just are going out there trying to ride around and get out of their house. I don't know. It doesn't look great right now. And if I look at the weekly, obviously, it has had a pretty decent run. I mean, we were down, $15 was the low back in April? Yeah, $14.65, and we peaked just recently up at $52. So it's been a great run, certainly due for some pullback, and I think that this will probably continue down here. So maybe not the news or the analysis you're looking for, Tim, but it looks a bit weak right now, and to me, it's all about this pullback. Where's that pullback going to stop? The logical point is here at 40 right now. 37.50 is another one, and then after that, I think you're looking about $35, which, $5 off a current price. Good 11-12%. Sitting in a restaurant watching, and my battery's going to die. In a restaurant? Well, Lisa, where are you at? You let me know. I'll come and join you for a beer or something. We'll do a show. We'll broadcast a live show from a restaurant. I was trying to, years ago, I saw this really cool idea. I forgot who it was, but he did a show on Fridays. And what they did is they went down to a local bar and just called it I think it was called the 19th Hole was the name of the show or something like that. And they would do a financial talk show from a bar. I thought that's a great idea. Unfortunately, most of the bars are just opening up. It's going to be really loud. And plus, I won't be able to show charts and everything. It was basically just a talk show. Maybe I can get Larry Jacobson and Todd Davis to do one with me on Fridays just for fun. We'll meet for happy hour, and I'll see if I can organize a bar to let us in. It'll be fun. Oh, New Jersey. I'm not going to Jersey. You guys are cracking down on BlockFi over there. BlockFi. New York, Texas, and now New Jersey. I think, is it New Jersey? I think it's actually New Jersey or New York, Texas and Alabama all going after BlockFi, saying that they're investments. So this is going to impact the cryptocurrency space here as far as staking goes and getting yield on investments or holdings, if you will, at BlockFi. Interesting. All right. All right, so I'll look at NVIDIA here in just a second. Batista, let me keep going through here. What did you use for your $1 stop loss hourly? It was profit. I basically sold myself out a $200 stop on this one, and I went, you know what, $200, the $100 level there. If you look at DOV, it wasn't anything really technical. I wasn't. Let me go .d, and we'll go 5 minutes. All right, so if you go back, it really wasn't anything much of a technical level. I was kind of looking at this. It jumps up and then came ripping back down. So I was really kind of using this line right here at 164.20. All right, and that was kind of the spot, and my entry was at 163.20. So I had $1, 200 shares on it. Done. Call it a day. A little bit bummed, but oh well. I don't mind losing $200 because if I was to hold it, if I was still holding it, I'd be down even more. So that's fine with me. I'm all right with that. All right, a couple more questions. Raymond just sent kind of an abstract one. Raymond just says long euro at 117. Okay. Any specific trade here, Raymond? Do you want anything else? All right, I'll look at the long euro at 117. Now, let's go to the daily, EURUSD. If you look at the bigger picture here, let's go out to a monthly. I know I normally don't start that far back. Really what you have on the monthly looks to be like just kind of sideways channeling, albeit in a large range. And we can zoom in here a little bit by going to the weekly. And you can see that we're coming back down into an area. I'll put the line right across 117 where you mentioned. Not bad. And this is starting to look similar to what we saw with the Russell 2000, which is you have this range established and prices bouncing back and forth within that range. That personally is some of my favorite things to trade when you see this range-bound security action. Now, as you're getting near the bottom and you say buy the euro at 117, sure. The question is what's going to cause this to bounce? Where is that action going to come from? If you look at the dollar index, we'll go $DXY, right? The dollar is at that supply level already. It's already there. And really for me, it depends on what happens with the dollar. If the dollar ends up breaking this 93 and gets a close above it, then I think that demand zone on the euro is going to break and you're going to see it go lower. So yeah, I just don't see that happening. Let's go to the daily. Here's your daily on the dollar index. We really haven't gotten that close above. Yes, you got one way back here. That's the absolute peak, but it's been building more and more strength. And if we do get a close above this, the high there really is right around 93.50. If you get above that, you could see this thing really start to run. And if that's the case, your euro USD is going to come down to 117 and most likely go through that and continue down. You'll see there are some levels that are a little bit lower than the 117 mark, getting you down to about 116 actually. So about another 100 pips on that one. So, you're 70 pips away from a demand zone right now and 170 away from what I think would be a stronger demand zone based off of the current trend. You want to join us in Mastermind some Friday? Maybe one of these Fridays, Lori. I am super slammed this whole crypto thing, but hopefully once I get past at least building the content, I'm building content at night. I'm in the studio every day shooting videos. It's been a lot of work, but hopefully we'll get that all done here soon, and then maybe my schedule will free up. Also, for those of you who are going to be going to some of these Elevate sessions, your local centers are putting on, I'll be joining Todd Davis and Larry Jacobson for one in Minnesota. I'll be joining for one in Houston. I'm also going to be joining one in Atlanta. I think Atlanta, I may actually be in person for that one. I kind of have issues with flying still, but we'll do our best to get on airplanes. It's crazy how the body chemistry changes and things kind of change in your head. Tom says, anybody else here going to the Woodland Hills event this Saturday? I wouldn't say featuring Crypto Merlin. I will be pumped in live on camera. I really wanted to go to that one this Saturday, but unfortunately, I'm going to a brew fest on Saturday where I have 4 hours of unlimited beer drinking starting at 12:30, and I'm also going to have about 10 people in my house for a little pre-game or pre-brew fest, so I won't be able to make it to LA. All right, what else do I have? So Raymond, I got your long euro 117. I would say okay, just make sure you have a stop loss in place because to me, it's not about the euro, it's more about the dollar. And if that dollar continues to gain strength, then I think you're going to see that euro drop more. I think that inflation discussion is going to happen here. You saw the news today with regards to unemployment claims. It was higher than expected. That, I think, freaked a few people out there. And let me show you some of that news that came out today. Here's your earnings for today. The noteworthy stuff for me is down near the bottom. Really surprised at what Southwest Airlines did. They were actually expected to lose 21 cents per share. I was under the impression that Southwest was still doing pretty good. Maybe this is because they had that big shutdown a couple months ago. They actually lost 35 cents per share, so a really big miss, and they were down 3.5% today on LUV. Now, you notice just above that, let me see if I can highlight these for you. There you go. You had American Airlines, who was expected to lose $1.80 a share. They only lost $1.69, so they're losing money, but they were much better than expected. It was down 1.3%. So definitely some wild swings. Here's Southwest Airlines, just so you guys can see that chart. We were looking at this as well as that Jets ETF, JETS, which had a real nice bounce off of a demand zone. But Southwest really kind of struggling, and I think, again, this has a lot to do with their grounding, their shutdown here. Sam Adams tanked on earnings, AMC today. No, Shinobi, not German beer. This is just a typical little, Southern California fun fest. They do these beer fests all the time, and they've been down for about the past year. I would love to go back to Oktoberfest. Hopefully that will happen. It's weird. If anybody here has ever been to Oktoberfest or hasn't been, it's really just a state fair, right? It's like going to the LA County Fair or the Orange County Fair. It's like going to a state fair, but it's all revolving around beer. It's all around beer, but you got the rides, you got everything. And the fun part about it is, like, if I go to this beer fest this weekend and I drink too much and I stagger around the grounds, I could get arrested, right? I could get drunk in public. I could get cited. In Germany, when you go to Munich and you're drunk in public, I mean, you could pass out. You just be completely belligerent. They'll put you on a gurney with a plastic shield so you don't get anything on anybody and wheel you to a safe place. You're not going to get arrested. So it's always fun. Love Oktoberfest. Well, Tom, I try to be humble anyway, but I will be doing my best to just talk the basics of crypto, because most people are. I think you guys, as followers of this show, already have a way better understanding of crypto than most people, and I think that's because we talk about it quite frequently. So it'll be probably a basic overview, but we'll see how it goes. Let's see. Oktoberfest Munich is so awesome. Yes, love it. You guys know I was born in Munich, right? I was born in Munich. There you go. Ich bin ein Münchner. Gonna get a hotel. Oh, not only can you not get a hotel room, Shinobi, it's the price. I mean, I got a hotel room. It was like $300 a night for a dump. I could not believe it. All right, we're going to digress. Let's go to more economic data. So that was the earnings for today. I'll show you tomorrow in just a second when we get near to wrapping the show. I'm not going to wrap just yet. Here is the economic announcement. So what was noteworthy here today was this line right there. Those unemployment claims. We've been on a very steady slide with regards to unemployment claims, meaning fewer people seeking unemployment. The historical average over the past decade or so seems to be about 250,000. So we were getting close. Now all of a sudden we saw a pretty decent jump. It jumped by about 50,000 unemployment claims. So nothing to freak out about. I think that a lot of the pundits are saying, oh, this is because of the Delta variant, etc. I don't know. I don't look at 1 point data, but it is a pop up after months of continuous decline. So, maybe we get a little bit of a rally up here, like 3 or 4 weeks of unemployment claims rising. If we do go on more lockdowns, obviously this number will get much higher. The other part here that was interesting was new home sales. It wasn't out of line. You saw those jump as well, but not as much as expected. So there you go. Nat gas. Yes, we'll bring it up in just a second. And look at the storage. We've got tons in storage. You would actually think it was the other way around, right? You would think that that would be dropping because inventories were they dropped, but not as much as they expected. Yes, Les. Hey, Les, I'm not talking about NVIDIA because you weren't here on time. You were late today? No. You didn't greet us at the very beginning of the show? No, we're not talking about Les today. I'm kidding. All right, let's go to NVIDIA. So since Les wants to know about NVIDIA, remember I mentioned, normally it happens in one day. So we talked about how when the split happens, normally, from my experience, what happens is the day of the split, it rallies for a little bit. It'll rally, for a couple hours, and then it rolls over, and then you start to see a big sell-off. Well, we didn't get that rollover yesterday. the 2 days ago when it split, you had actually a nice rally up. Now, all of a sudden, you have this candle right here, which is a hesitation candle. Now, it's not on climactic volume. It's not very high volume. But these small candle right here where my cursor is at, basically, you can barely even see that that's a red candle, right? Small little real body with topping and bottoming tails. That's hesitation because nobody really had any sense of direction. They didn't know whether to close this thing higher or lower. Great opportunity here going forward. So one of the ways that my mentor years ago showed me this, he goes, hey, easy way to trade these ones is just put a line on the top about what happened today, throw a line across the bottom, and don't do anything until it does one of those two, right? If it breaks above, fantastic, go long. If it breaks below it, fantastic, go short. And those numbers, for those who might be listening to the podcast, on NVIDIA, that's 192.76 is the low, 198.87 is the high of that candle. So I'll be keeping an eye on this one as a potential short because I do anticipate the normal thing happening, which is people selling out of shares because now they have many more shares than they did before. Granted, it's at a lower price, but I have a feeling you'll start to see the sell-off. So I would love to see this open tomorrow somewhere in between these two lines and then start to drift down. That's what I'll be playing for. I'm your mentor. Let's see. Abandoned baby candle. Yeah, some call it abandoned baby, a spinning top, a doji. Either way, when you look at something like this, you just got to tell yourself, what happened? If every one of these candles, and this has helped me over the years, you have to look at every one of these candles represents a full day of battle, right? Whether it's the Civil War or Vietnam, every war has a daily toll. The balance of power may shift from one side to the other in that war. I know it's a graphic, horrible example, and I apologize for anybody who might be getting PTSD because of the comments, but it is a battle. It's just buyers and sellers duking it out and absorbing whatever news and anything that comes their way to formulate their decisions. So if you notice, we've had very clear winners. If you go back to the 13th of July, sellers won. Sellers won big time the next 3 days. I mean, it was huge selling pressure. So the buyers basically just backed away. Then all of a sudden, buyers found it, came right into a demand zone, great buying point, and it ripped up from there. Hesitation, now it's following up again. So, you really just wait and see what's happening. Today's battle was almost them just taking a breather, right? Looking at each other going, well, I'm going to take a break today, right? And notice the volume. Volume was 32 million versus its 44 million average, so taking a little bit of a break there. All right, let's go at NG. Dun, 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 dun. Superman, super chart, and again, my guess, Scott, is you're probably looking at this going, when's it going to go down, right? When can I short this thing? Don't short it. And just because I said that, it's probably going to crash 50% tomorrow. You don't really want to short this one. You want to just kind of let it prove to you that it's going to be going down. Right now, for whatever reason, it's just unbelievably strong. I don't know when or where this is going to turn. I don't have the adjusted here. You're coming into monthly levels, but you've got a long way to go before you hit anything really significant. And if I'm not mistaken, I can't remember. You guys probably remember better than me. When we had John Rowland on the program, if I remember correctly, he was very, very bullish on natural gas when he was on the last show. Maybe you guys can pull that one. If I get some time, I'll look at it for tomorrow's show. He gave some justification for why he had such bullishness on crude oil or natural gas, and I believe, I think he even said $4 was his target. I'll have to check that one, make sure. But it's been an unbelievable run on it. When's it going to come down, Scott? Don't know. No idea. I mean, could natural gas hit $5? Yeah, absolutely. Could keep on just running and running and running. You just never know how these things are going to go. At a certain point, it's going to be driven by supply and demand, right? And there's going to be people who go, I'm not paying this much for natural gas. And naturally, prices will start to drop because some of the consumption will dry up. So the higher that price gets, the more likely it's going to have a correction, period, especially with commodities. If it's a stock price, that's a little bit different. But when you're dealing with commodities, there's only a certain amount of money that people are going to pay for natural gas before they go, I'm going to switch and go to some other fuel, some other source. So, okay, let me go to tomorrow's list. That was the economic calendar for today. Here's what we got cooking for tomorrow. Fridays are generally light. It will be a light day, but you do have Schlumberger, American Express, which was in that portfolio they were told to snatch up according to that Yahoo reporter. Honeywell, Next Era Energy, and Kimberly-Clark will be reporting earnings. Yes, toilet paper back in vogue. No hoarding going on in toilet paper right now, but you know, if we go on lockdown again, check your Costco and buy yourself a 2,600 pack of double ply. What else do I got for tomorrow? Economic announcements. There actually is a lot. It's really one of those days that I love this type of day because it gives a reflection from the entire global community, or a majority of the major global community, on flash manufacturing and services. So you can see here you have French manufacturing and services PMI, followed by German, followed by the EU, followed by the UK, followed by the United States. The United States one will be 15 minutes into the market trading session, so be ready for that kind of volatility. This is happening as the markets are open. It's always different when it happens pre-market because the market will kind of absorb that in the pre-market session. Now you'll have it during the day, and this, granted, it's not the biggest driver with regards to manufacturing or services, but it is important. And if we see spikes up or down in this data, that could create some nice volatility for us, which we'd love to have that. More volatility is good. And that will do it. So, yeah, I don't have a guest for tomorrow. I did reach out to Tilly, and for those of you who told Tilly to say something, I know she hasn't been feeling very well, but we're hopefully going to get her on next week. It's been quite some time, and yes, I know Brendan's here telling me I probably need to have Greg Manarino on the program, which I will probably do that as well at some point soon. I'm just too damn busy. All right. That's going to do it for me, everybody. If you enjoyed today's show, you can always give me a thumbs up. If you have comments, feedback, if you want me to spend some more time analyzing things. A lot of times when you send questions in during the show, I may not have enough time to formulate an analysis of it or do all the drawing that I need to. If you email me stuff at TraderMerlin@gmail.com, generally I will get to that on the next show or maybe the next one. And it gives me a little bit more time to build out some things. Of course, I'm fairly busy in the evenings as well, but I try my best to get to all those listener questions. So that'll do it for me for today, everybody. Hope you have a great Friday. I'm looking forward to it. I think it's going to be a great weekend wrap up. And remember, next week is going to be just the absolute monster week. I can't wait for next week's trading, but I have to make it through one more day of this week before I get to that one. So thank you guys. Have a fantastic day. Birthday tomorrow. I will definitely give you a shout out. I will give you a cheers on the show, Walter. So we'll see you guys tomorrow. Take care, everybody.